Welcome to Market Briefs. Here's your daily market summary for Monday, May 18th, 2026. On the surface, a quiet day for stocks. Underneath the surface, one of the wildest sector rotations we've seen in weeks. And that's the real story. The S&P 500 barely budged, closing down less than 0.1%. The Nasdaq dropped about 0.5%. The VIX, which measures fear, fell another 3%. So at the index level, today was a non-event. But look one layer down, software stocks ripped. Roblox jumped over 9%. Service now added nearly 9%. Cognizant, the IT services giant, climbed ahead 9% on heavy volume. Meanwhile, the names building the artificial intelligence boom got crushed. Semiconductor stocks, data center electrical equipment, optical components, all down 7 to 9%. The story today wasn't the index. It was money rotating violently from the companies building artificial intelligence infrastructure into the companies selling software on top of it. Bitcoin slipped under $77,000, down about 0.75% on the day, and it's now given back all of its May gains. There was no single piece of news driving this. The story is in the flows. Over the past week, Bitcoin holders moved more than 10,000 coins onto exchanges. That's classic supply pressure, sellers positioning. And spot Bitcoin exchange-traded funds saw heavy outflows over the past 3 days. Meanwhile, the on-chain fear and greed index dropped to 28, well into the fear zone. So while Reddit and Twitter sentiment is still bullish, the people actually moving Bitcoin around are getting cautious. That divergence is the warning sign. Here's the tension. Core personal consumption expenditures inflation, that's the Federal Reserve's preferred gauge, jumped to 3.2% year over year, up 0.2 from last month. The Fed has been sitting still. That means the real Fed funds rate, the policy rate minus inflation, fell more than 30% in a single month. It's now at just plus 0.44%, barely restrictive. This is what people call stealth easing. The Fed didn't cut, but real policy got materially looser because inflation outran the rate. For Bitcoin and gold, that's normally a huge structural tailwind. But the near-term flow picture is hostile, so the tailwind isn't winning today. The bond market is sending a confusing signal. High-yield credit spreads are still tight. The National Financial Conditions Index is loose. Credit markets are essentially saying all clear. But this week's economic data was not all clear. Initial jobless claims jumped 6%. Consumer sentiment collapsed almost 6%. The Chicago Fed National Activity Index flipped negative. These are early warning indicators, and they all flashed yellow at the same time. Credit is usually the last market to react. The sector chaos under the surface in stocks today is the market starting to price it in. Oil benchmarks split. West Texas crude rose 1.33%. Brent crude was flat. That widened the Brent to West Texas spread to almost $7, back into elevated territory. That tells you global oil markets are tighter than the U.S. market. Likely OPEC supply discipline and lingering geopolitical risk on barrels moving by sea. Natural gas added another 2% and is up 14% over the past month. The energy complex is signaling continued physical tightness, which can pass through to jet fuel, diesel, and fertilizer costs in coming weeks. The British pound was the day's strongest currency, up nearly 0.8% against the dollar, likely positioning ahead of Wednesday's UK inflation print. The Swiss franc also firmed. The dollar was the day's weakest major. But the broad trade-weighted dollar, which includes Asian currencies, actually rose 0.5%. So today's dollar weakness was concentrated in European pairs. Against the rest of the world, the dollar remains firm. The week's big events are both on Wednesday. UK consumer price inflation comes out in the morning. That's already moving the pound. And the Federal Reserve releases its minutes Wednesday evening. The minutes will give us our first detailed read on how the Fed is thinking about core inflation reaccelerating at the same time the labor market is softening. Expect interest rate volatility into Wednesday's close. That's your Market Briefs daily summary. Like and subscribe for tomorrow's update. And remember, this content is for informational purposes only and is not financial advice. Always do your own research.